Hello everyone, I've just did a little post in the members area. Today is Monday, right, the 23rd. It's this one, okay, regarding gold and what happens if you're late for a trade. Remember in this morning's video I made a comment. I said this is the PST price and that's the trading hour, and market moved up nicely from there, but not everybody is in Europe, or not everybody is in, in the time frame that sometimes trades happen. So what would happen if you missed that trade, like I did as well? We had a power failure here unbelievably, and so I did miss it, but nevertheless we can still get in. Why? Because we know the trading hours. Okay, now one thing you can do is when you're at a trading hour, you might be thinking, oh, what if it goes against me, because we came from one trading hour to the next and it may not follow through. That's true. So what do you need to do? Well, first of all, you need to make sure, well, if you're using your PST first of all, right, you can use the PST to see if you got room to go up. If you have got room to go up on the daily, for example, this was the support and this is where the market bought at the trading hour, and that level was 3,351. As you can see, market filled in a gap here. This is a 5-minute chart. It filled in this gap. I talked about the gap here in the video, and then moved up and then comes back and then starts to push up. So we understand also today is Monday, and Monday is one of the swing days for gold, right? So what you can do in a situation like this is you can also box it. Now, because we're in between levels, I don't like to take the normal regular risk, like to take a smaller risk. And then what you can do alternatively is this: you're either going to put a 1 bar stop loss on a 15-minute chart, or you can box it, which means that before the trading hour the market has done a high and it has made a low as we get there. So this is the box, okay, and this is the trading hour. So according to the trading hour, you got a little box. Then let's expand it. Why? Because it hasn't broken out yet. So the whole idea would be is, if this is the trading hour, if it's going to reverse, it should break to the downside and come down either to the daily or down here again to go up, or we should break out. If it goes up, then the goodbye kiss is a good place to get in to push up. Okay, so you can actually box it. This is a 5-minute chart, and I recommend to do that on a smaller time frame rather than a bigger time frame, because then you're going to be in the trade late and your stop loss will need to be further away if there's a big push after a breakout. Okay, so I don't do a lot of boxing because I read it, and then when I'm reading it and I say to myself, well, it's 130. What's 130 telling me? 130 telling me is that the market shouldn't really make a change because the value isn't sexy until 130. So that's your 130, okay? And then just bear with me. Rightio. And then that 130, why did that box disappear? I don't know. Let's put it up again. So that's the high and that's the low before. All right, and now I entered there obviously at 130. You can see we're in, and now it's breaking out. But what I'm just trying to say is you can box it, and then it breaks out on a pullback. You can get back in, especially when you have the box, because this is the breakout zone. When the market comes back down, sometimes it will come back, it'll muck around here. Then if it's the trading time and the price level, then you can kind of push up. Okay, I've posted the photographs on this before this market move happened, obviously. All right, here, and when I did that trade, I made a comment for you guys here, and that's the picture for it. As you can see, I've entered it at the 130. All right, and then I'm thinking either here or here we should be going to the upside, being a swing day, and I've got the 3,450 here, which is the PST daily price, and that's a 1 to 25 risk return, and it's all the way up there. Now that may take obviously a day or two, or maybe even a few days, I don't know, okay, but it's worth it because I've got the daily, so I don't mind going into that zone. The market came down, swing day, Monday, so we're going to try it out. Okay, and it was a daily PST there. Now with gold on the weekly, as you know, we've got a bit of a drama but I don't mind taking the daily if it's a trading hour and this is just a follow through. And if I'm trading at the right times, okay, with decent technical analysis and tight stop losses, so even if I may be wrong, it's not going to blow up my account. It's going to be very small, and because we're using time, we don't have fear of missing out, because I can just wait for the next hour, the next trading hour, and just, you know, relax. You don't have to be jumping in. So make sure you're not FOMO trading. Use the time, the hours, and so on. And like I said, you're either going to, you know, enter a retracement, you're going to enter a PST level, breakout, goodbye kiss, that kind of stuff. Everything, you know, we use with technical analysis, as you know. Okay, I hope this video helps. Have a good one.